Hi there, welcome to Kneppy Invests. Fair reporting season is over, thankfully, because every single day for a few weeks there, I was quite busy going through as many results as possible. And a lot of times you'll see a lot of volatility in company share prices upon the release of the results. We see share prices rising by a fair bit and falling by a fair bit as well. And usually the market reaction to results from a company is all based off how the results differ from expectations, and also if the company has given any guidance for the rest of the financial year or next financial year. So I've gone through quite a few of the results, and there have been quite a few shockers when it comes to these February financial results. And I'm going to go through 5 of these shockers. Now, in terms of the word shocker, I'm not actually referring to the results themselves. I'm referring to the actual market reaction to the results. And that is the most important thing. Your opinion of the results can differ from how the market views the results, but it doesn't matter one iota. It's all about how the market views these results, and you can see how they react by how much the share price falls or rises. And in this case, I'm going to go through 5 companies that saw their share price decrease by a significant amount on the back of these financial results. And those 5 companies are Mineral Resources, Cettire, Praemium, Chic, and Dominos Pizzas. Now, first company I want to look at is Cettire. I did do a dedicated video on Cettire's half-year results because share price did drop 21% on fairly high volume, and it was really interesting trading on that day because initially share price opened up. And the reason the share price opened up were, I'm not going to say amateur investors, but those investors who just saw the top line, the growth in revenue, and there was phenomenal growth in Cettire's revenue, they bought on open because that's all they saw. Those investors who dug a little bit deeper, who waited, saw there were some significant red flags when he looked at the balance sheet and the profit and loss statement, and that's why the share price fell 21% during that day, because of those significant red flags in the financial statements. If you want to know about those significant red flags, just look at my video I did on Cettire, a dedicated video that I released around about the February 4th or 5th. Now, because of those bullish investors who saw some opportunity, when the share price fell 21% of the day, share price fell from about $3.20 at the high of the day down to $2.40. They saw an opportunity to buy into Cettire at lower share prices. And those bulls actually forced the share price up over the next few days. There was also some positive news that the company did release 2 days later, and that's why the share price rose 22%. But that positiveness waned away fairly quickly. The downtrend had not been broken, and because the downtrend had not been broken, the shares continued to fall after that the following 3 weeks, and the downtrend has been confirmed, and the current share price at the end of closing on March 4 was right on $1.98, which was a solid support level that was created between about June and August of last year. We did see the share price test $2 a few times, and $2 held firm, and that's why we saw the share price rally from $2 to a high of $4.80, which was reached in November of last year. But at this point in time, a lot of negative sentiment around Cettire. Share price is a well-defined downtrend. Now, I am changing a little bit. I am recording this video about 1 hour and 30 minutes after trading has begun on the 7th of March. I just wanted to see if this support level at $2 has remained firm. It has not. It has been broken. Share price of Cettire is down a further 10%, was around $1.73 last time I looked. So that's a fairly bearish move, but trading has not ended. On the 7th of March, we might see a fair bit of buying coming in to push the share price back towards that support level at $2. But if we don't see the share price move above $2 over the next few trading days, that would mean that this $2 level of support has now become resistance. Now on to a company that is looked upon quite favorably by fund managers. I'm always hearing this company mentioned as a company potentially you might add to your portfolio if you are bullish on lithium, or you want to have a mining mining services company in your portfolio, and that is Mineral Resources. But over the past 9 months, and this is the chart going back to May last year, it's been a fairly strong roller coaster ride for any shareholders, because you can see the share price rising and falling in quick succession over the past 9 months. And even though the Mineral Resources share price is closely correlated to iron ore prices, it's not completely correlated. And we can see that lack of correlation in the past few months, because the share price of Mineral Resources has dropped from $67 to $44, even though there has been a fair bit of strength in iron ore prices. But if you go before that, definitely there is some mirroring between Mineral Resources share price and iron ore prices. But it was the release of the half-yearly results. And I think as the half-yearly results was closing in, we did see a bit of selling coming in from Mineral Resources. And the share price, or the market, pushed Mineral Resources share prices from $67 to about $53, $54 just before the release of the half-year results. And the share price of Mineral Resources dropped 9% on the back of the release of their results. Now, I think one of the reasons why the results looked a little bit weaker than the market was expecting was because of iron ore prices in the past. So there is potential. Now, I haven't looked very closely at the results, but there is potential that if iron ore prices keep on rising, that their yearly results could actually be better than the market expects. And this could be an opportunity to buy into Mineral Resources at lower prices. The other thing you'll notice after the release of the results, just like we saw with Cettire, there was a little bit of buying that came in the next few days, pushed the share price higher. That buying waned away, and we saw the share price fall from $55 to a low of $44. So that's a nice 20% drop in share price. From a few days after they released the results to 2 weeks later. So at this point in time, keeping a close eye on Mineral Resources, because I do think this was an overreaction from the market. Slightly worse results than the market expected because of weaker iron ore prices in the second quarter of the financial year. Now to a company that I don't really follow too closely, but this company has or was a pretty good performer since COVID-19 financial padding. That's Praemium. I think that's how you pronounce it. Their ticker code is PPS, a financial services company. Exactly what they do, I'm unsure now. I'm going to have to do a little bit of research on this company, because we did see the share price in a well-defined uptrend from May last year to around about late January of this year. Share price had moved to a high of $1.60 from about 70 cents. So a nice return for shareholders over that period. But the share price was struggling at the start of 2022. We had seen a share price fall from $1.60 back to $1.20. So a nice fall of about 25 cents. And there was a little bit of negative sentiment, and did look like the trend in the share price of Praemium was turning around. And I think the market was a little bit nervous about the upcoming results, because when Praemium did release the half-yearly results, the share price fell 14% on that day and then continued falling over the next few days. And in fact, the share price has fallen from about $1.25 the day before they released their results to a current share price of 78 cents. That is a significant drop in share price. And unlike Cettire and Mineral Resources, there was no bounce in the share price the days after the release of the results. In fact, the share price kept on selling. So there was lots of negative sentiment in regards to these results. A lot of selling. You can see massive volume on those days as well. And the share price has not recovered from them. So without doubt, these results were not good from Praemium, and the market has reacted likewise. It did not like these results at all, and that's why the share price has been absolutely punished. Now on to a company that was a market darling for a long period of time, about 18 months. In fact, during March, April of 2020, I thought this is one of the companies that could really benefit from any sort of lockdowns, because pizzas being ordered online and delivered to your home would be all the rage during those periods of time. And that thesis did play out. And I think the market even thought that was going to happen. And we saw the share price of this company move into an uptrend, and it reached a high of $166 in September of 2021. But all good things come to an end. And I think the market anticipated that people buying Domino's pizzas would decrease once all these lockdowns had come to an end. People could go out to restaurants, actually sit down at a restaurant, order some really good food. Not that Domino's pizza is not good food, but not really the pizzas for me. I prefer gourmet pizzas. But Domino's Pizza's the tailwinds behind Domino's Pizza's success were coming to an end. So that's why we did see Domino's Pizza's share price move into a downtrend because of the short to medium term negativeness in the business of this company. So the share price moved into a downtrend, sentiment shifted to negative, and the share price dropped. And it kept on dropping from September last year all the way through to just before the company released their half-yearly results. And when the company did release the half-yearly results, the share price dropped from $100 to $85, a 14% drop in the share price, and has continued to drop the few days after the release of their half-yearly results. So no bounce in the share price like we saw with Cettire or Mineral Resources. And in fact, right now, the share price is at $80, dropping more than 50% from its high back in September. I do like this company. I do think Domino's has potential to grow over the next 5 years. So I have put Domino's into one of my turnaround watch lists. So I'll be keeping a close eye on the share price movements of Domino's. And if I see Domino's share price move into a consolidation period, go sideways for a while, I will keep even closer eye on this company's share price and particularly on the financial performance. Because if I do see the share price move into consolidation, I will be looking out for a breakout in the share price out of that consolidation period, and hopefully that breakout will coincide with some good financial news. Now to the last company featured in this video, and that is Chic. Now this is also, or has been, a market darling over the past few years. If you don't know what Chic does, they have stores that cater towards, or sell clothing that caters towards plus-sized women. So I am not a plus-sized woman, so I will never go into a Chic store unless I'm really keen about taking a position in the company and just want to see how business is going, that sort of thing. I might talk to people who work in a Chic store to see if there's a lot of people coming in, but that's probably the only reason I might even think about going into a Chic store, because I'll never buy any Chic clothing. Anyway, this company has been a market darling for a while and has been a good wealth winner for shareholders over the last few years. And that continued well after COVID-19 financial panic. In fact, the share price high of Chic was reached in October 2021 when it reached a high of $6.80. But at that point in time, I think the valuation of Chic was a little bit too high, was a little bit stretched. And I think the market was thinking likewise. And that's when we did see sentiment starting to shift and the trend in the share price started to turn from a well-defined uptrend into a downtrend. And that confirmation was towards the end of 2021 into start of 2022. Definite shift in trend of the share price, definite shift in sentiment as well. We did see a little bit of a bounce in January, start of February. In fact, the share price went from $4.50 to $5.60. But leading up to the half-year results, we did see a little bit of negative, a little bit of selling coming into the market, pushing the share price down from $5.60 to $4.80. So the market wasn't perhaps anticipating some bad results from Chic, and they definitely delivered bad results to the market. Share price dropped 31% on the day. Now, I have not looked at Chic results now, but I don't need to look at the results to know they were not what the market expected, or possibly the company did not give good guidance for the rest of the financial year. So that's why the market reacted with a 31% drop in the share price. The next 2 days, or the following 2 days, there was a little bit of excitement. I think because of recency bias, there would be some shareholders or some potential investors who saw the share price drop 31% and saw the opportunity to buy Chic at cheaper prices. And that's why we saw the share price rise about 10 to 15% the next day, up from about $3.50 to almost $4. But the share price has continued to drop from there. We've only seen 4 trading days, but it has dropped from $4 to a current share price of $3.56. And there is potential the share price could drop further from here, just because of the significant negative sentiment in City Chic right now. If I was bullish about the long-term future of City Chic, what I would be doing, just remain patient. Wait for this negative sentiment to play out. Wait for a bit of consolidation period, and that would or could be confirmation the share price bottom has been reached. So up until then, just remain patient. And there is a potential the share price could recover quite quickly from here. But you're playing probabilities, and the highest probability is that the share price of City Chic will fall further from here. That's all I have for these 5 companies that released shocking financial results in the February reporting season. I've really only looked at Cettire's half-year results, and I can completely understand why the market punished Cettire by 21%. I have not looked at Mineral Resources, Praemium, Dominos, or City Chic, and I don't really need to look at the results to know the results were not what the market expected, or the company did not give good guidance for the rest of financial year 22, or even potentially for financial year 23. If you have any questions about any companies I featured in this video, just leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a great day. Bye.